This is RV on Business.
Welcome back to 101.9 Chai FM. Thank you so much for your time. The time now is 5 minutes past 10. And before we get into it, I just want to let you know that the Johannesburg Philharmonic Orchestra has an early spring session that features an exceptional lineup of world-class international conductors, acclaimed soloists, and they are all performing alongside the JPO's finest musicians. Enjoy a magnificent program, features much loved works by Tchaikovsky, Brahms, Mozart, and much more. The concert takes place on Thursday evening at the Linda Auditorium from the 13th of August to the 3rd of September at 7:30. And I can just add in that the beauty about the Linda is it's very close and that there's a lot of parking. Season tickets are available at jpo.co.za, while single concert tickets can be booked through QuickTech. So through Quicket, Quicket. Experience the magic world of classical music with the Johannesburg Philharmonic Orchestra. And getting back to the show, the Of Your Money Show, thank you so much for listening and thank you so much for being with us. Today, we are going to discuss one of the topics that seem to confuse people more and more as time goes by. And that is the difference between what we would call an income replacement benefit, an income continuation benefit, and a lump sum disability benefit. They are often lumped into the same category as disability, and they could not be further from each other in as far as the criteria is concerned for them to pay out on a disability. There's a lot of overlap, but the premise is somewhat different. And what we're going to do today is just put it in simple terms that we can all just get our head around and understand it. But interestingly enough, I've just come out of a conference where the overlap between them has been widened. And a lot of insurance companies are now looking to broaden the overlap between the two benefits to make sure that they cover a greater portion of the population. There was a time, for example, where a company like FMI, which is now known as Bidvest Life, only covered certain lives. Those lives were considered high-risk lives or inferior risk at certain insurance companies. And the market is now working very actively to try and insure those lives. Look at what risk Bidvest is prepared to take and ask, why can't we take that risk and how can we structure it? So there's a lot going on, but let's start at the very, very beginning. I suppose if you go back to the days of Sage Life, Liberty Life in its early days, there was an income replacement benefit or income continuation benefit that was barely used. People just didn't even know about it. The products that were sold were life cover. And the premise for that is that if, God forbid, you don't wake up in the morning, what are you going to leave for your loved ones? You need to make sure that you leave them enough capital so they can invest it, so they can continue to have the lifestyle they need. And what is your debt? And what is your liability to the tax authorities? What is your death tax? And working that all out gave you the amount of life cover you need, and nothing's changed. That is still there. However, there are products around today that can help you to cover some of those debts on death, those liabilities that arise on your passing. Well, talking about that, we now need to pass on to a break. The time has come. It's nearly 10 past 10. Let's take a quick break. We'll be back with you in a moment.
Chai FM, your station of choice since 2008.
Head to Dis-Chem for your best winter buys. Look out for the yellow label to enjoy bulk savings on Better Rewards brands. Swipe your Better Rewards card when you buy 2 packs of FlexiCal 30-day supply and save 223 Rand, now only 575 Rand 99. Plus save 59 Rand when you buy Everflu C Immune Booster 20 tablets, now only 155 Rand 99 for 2 packs. Valid until 9 August at Dis-Chem. Better health starts here.
What if someone you love stopped breathing? In that moment, there's no time to wait, only time to act. Family and Friends CPR course at the Hatsola Training Center. Go to hatsola.co.za and book your course today. Hatsola, a moment of learning, a lifetime of living.
This is RV on Business.
Welcome back to 101.9 High FM. Thank you so much for joining us. And if you've been with us, thank you so much for staying with us. The time now is 11 minutes past 10. Right, we're talking the difference between income, disability as a lump sum, and income replacement as a monthly payment. We were talking before that in times gone by, there was life cover. We discussed why you would need it. Then there was disability cover. And the disability had a very, very simple definition. Total and permanent disability that left you in a position where you are unable to look after yourself. That's it. There were mutations of that. There were different categories of that. But I give you a practical example that I was involved with, where a young lady was involved in a car accident and she broke her wrist. Wasn't able to use her wrist for a couple of weeks, was in a cast, and thereafter was told that she would never have full mobility of her wrist, which means things like a tremendous amount of dexterity, maybe threading a needle. But yes, she could use a mouse, and I remember watching her use a mouse. It was very awkward. But what then happened was that she claimed for disability. And the underwriters turned around and said, "You are not disabled." She says, "I am permanently disabled. I can never use this wrist the way I used it before." And the answer was correct. But number one, with therapy that we will pay for, and number two, with time, you will get back the majority of the use of your wrist. But more importantly, you will not be disabled by its lack of function. And the client was very, very upset and very hurt. And we then met with the underwriter. And it's a fascinating story that I'm happy to share because it really highlights how the companies look at this. She was a young lady with long black hair. She was wearing a white blouse with delicate buttons. And she was beautifully turned out. She arrived at the meeting. And let's say, for argument's sake, it was her right wrist that was hurt. And she sat down, and the underwriter explained to her that we're not paying this claim. And the reason being is that you are able to look after yourself. You're able to get in and out the shower. You are able to dress. You are able to prepare food. Yes, you might never be a professional squash player, but the use of your wrist doesn't stop you from driving, from changing a baby's nappy, nothing like that. The client was not happy and accepted the situation and walked away. I then sat behind and said to the underwriter, just as a point of education, could you please fill me in? This happened a week later when the report came out. And the report highlighted her hair, her blouse, the way she was sitting, one hand over the other, etc., etc. And I called her up and I said, just glancing at this doesn't look very PC. The detail in which you went into as to how the client was turned out is almost to me superfluous. Why did you highlight that? And the answer was absolutely fascinating. She said, yes, to the untrained, you're correct. It does look like I'm being pedantic or we are being nitpicking and pointing out details that might not be relevant. But let me break it down for you. That beautiful long black hair could not be brushed effectively with the non-dominant hand. She used her right hand to brush her hair. Those delicate buttons were done by her. She says, look at her husband's hands. He's a mechanic. And not that there's anything wrong with being a mechanic, but his hands were not clean in the meeting. See, he's come straight. So she did the buttons herself. You can't do those buttons unless you have the dexterity. She sat with her good hand on top of her bad hand or the other way around. I don't remember. But in any way, she was saying that if the wrist was in pain, you would sit the other way around. And she pointed out all these different points and really highlighted the client is not disabled. She might not have full functionality and full dexterity, but as far as day-to-day and ability to work, she is there. So I walked away feeling that I had done everything I could to get the client the best payout. The client really felt a little bit hard done by, even though she understood it, and she had been through a terrible trauma. So that's what it was previously. Then you've got severe illness. Severe illness payout is really, if you look at it, if you put the amounts that you insure, 1 million disability, 1 million severe illness, you'll always pay maybe twice or 3 times for severe illness, just as at a glance. And that's really because severe illness plays out on diagnosis. Classic case, again, a practical example. Client of mine went to visit the dermatologist, and the dermatologist said to her, you have a growth that I'm not entirely happy with. I don't think it's anything to worry about, but I need to see you in a year. Now, of course, she forgot about the appointment. Her daughter saw her back one day and said, Mom, you've got something really ugly on your back. And that triggered the memory. She just threw something on, drove to the dermatologist, sat in the waiting room. He looked at her and said, the ironic thing is that thing that's growing on your back that looks ugly is actually nothing. That I'm just going to take off here, right here now, and it's not an issue. The thing that I told you about a year ago has now developed into something that I don't like, and I'm going to do this and this and this, and I want you to be here tomorrow at this time, unless we call you. She was there the next day, and he says, look, it's a melanoma, it's malignant, and I'm going to cut it out. Right there and then, he did it, the procedure in the rooms, and she got a massive payout for that. Did she ever take time off work? No. Was she ever feeling out of it? Yeah. I don't think the drive home from the dermatologist was too comfortable, and maybe she couldn't shower, with her back to the water stream for the next couple of days. But on day-to-day, no one would have known the difference unless you were looking at a little scar on her back. And that's how severe illness plays out. And there are different categories. I've had categories where a client has been in ICU for a heart issue and yet has got a category of severe illness that doesn't cover the event that he had. And as traumatic it is and as painful as it was, there was no payout. And that's where these categories start becoming an issue. But that's not the point of today's show. Today's show is to really say that was the basket that you dealt with up until recently, where our insurance industry has just matured, has grown, the benefits have broadened within each category, and the professionalism that is available now is absolutely phenomenal. So we're going to take a quick break, and when we come back, we're going to dive into what is the difference between lump sum disability and income disability. We'll be back with you in a moment.
This is RV on Business.
Welcome back to 101.9. It is 20 minutes past 10. Thank you so much for joining us. And if you've just joined us, we are now going to dive into the difference between lump sum disability and income disability. And so let's start at the very beginning. What is the premise? Income disability or income replacement, whatever the suffix is reliant on the word income. Its job is to make sure that should you be unable to earn your income for whatever reason, it will cover you. I'll say for whatever reason guardedly, because we need to look at the criteria that it covers and how and why it covers. Disability has the same rules it's always had. Total and permanent, and that it affects the way you act and the way you behave and the way you conduct yourself. 2 separate criteria. So an income disability is there to replace your income should something happen to you which creates an ability for you, a lack of ability for you to earn an income. But what happens if you're employed? And the fact that you are not at work doesn't really affect your ability to earn that income. Your company might pay you for a month, 2, or even 3 if you are unable to work, whereas the disability actually has nothing to do with that. For example, if you are a manager in a IT business and you have a terrible accident and you've broken a hip, and you now put in a claim, and the insurance company says, based on what the doctors booked you off for, we will pay for 3 months. Your company says, Johnny, would you be able to log on from time to time and check what's going on? And Johnny's answer might be, absolutely not, I'm off, I'm not working. Or his answer might be, great, I'm going out of my mind, staring at the ceiling, lying in this bed. I'll log on, I'll do my normal thing, I'll check how it's going. The insurance company actually doesn't care. Whether you're working or whether you're not working, whether you're receiving an income, whether you're not receiving an income, they are paying on the event that happened. There are certain companies, for example, with PPS, they are a little bit more sticky with that. So you need to make sure you check the criteria with each company, but it's really based on the event that happens. That leads us into the next section. There are 4 important functions that when it comes to income continuation. The first one is how much to insure you for. And the answer there might be simple. Well, you insure me for what I earn. Yes, but there are legal restrictions. First of all, the premium that you pay for this benefit is not tax deductible, and the benefit you receive is not taxable. Whereas in the past you had a choice, it was either or. Now it's clear. No deduction and no tax. If there's no tax, well then you can't receive your full gross income. You can only receive your net income, because your net income is your income after tax. And the limitation to that is 75% of your net income. Today, most insurance companies have worked a way around that, and you can get your full net income. So let's just base it on that premise, and again, check each individual company that you're going to get 100% of your net income. So if you earn 70,000 Rand a month and after tax it's 50, you will get 50,000 Rand a month. The next thing is waiting period. How long are you going to wait before you get paid? And again, you might be scratching your head and think, well, if I'm disabled, I want to get paid now. So the shortest in the market is 7 days. That you'll need to wait 7 days, and that's really just giving everybody time to work out what's wrong with you. And with some insurance companies, things like motor vehicle accidents, MVA, motor vehicle accidents, work retroactively. That'll pay you from day one. So that's the way. So those are your waiting periods: 7 days, 1 month, 3 months, 6 months, and a year. Those are your different waiting periods. And they work together with the balance of that income. Remember, I said we can only insure 75% of your income. They work together with that other 25 that is insured over there. So let's look at the criteria as to who needs what. It's actually quite straightforward. If you are self-employed, you are somebody who needs to work in order to earn. Whether you are a top medical professional earning a tremendous amount of money, your cash flow is going to stop if you can't operate, if you can't consult. Same with a vet. If you're not going to look after the puppy, you can't charge for that. An accountant, an architect, all those type of incomes where you're self-employed or you're working for yourself, then you need to make sure that your income is replaced as quickly as possible. Number one, to make sure that you don't have financial stress. And number two, that you're allowed to convalesce and get back to work when you're meant to get back to work. Because the insurance companies would rather pay a little bit more now than have chronic issues going forward. The who is the person who's going to get the income waiting period of 1 month or 3 months? Those are people who are employed. So if somebody is employed and that person says to you, listen, my company is going to pay me for at least a month, or they'll pay me for 3 months. The difference in premium that they're paying, the longer the waiting period, the cheaper the premium, is really often a substantial saving. So by them waiting longer on the waiting period, they pay less. And on the other hand, it is actually illegal to have two incomes from two different sources at the same time as far as the coverage is concerned. That's another point, we'll get to it just now, but logically it also makes sense. If your company is paying you, which they can, and the insurance company is paying you, you're paying for that benefit on a once-off chance. So rather take a longer waiting period, especially those who work for big corporates, for big mining houses, where they've got stipulated in their contract how long they will be paid for if they're disabled. But again, there are cases where a professional will say to you, listen, let me see the quote for 7 days. Let me see the quote for 30 days. Wow, that's a big difference. I can carry myself for 30 days. As it stands now, I've got a month or 2 or 3 worth of income sitting in an account or in a unit trust, and I can call on it should something happen. I would rather pay a lower income. So that's the amount and the waiting period. The next thing we need to consider is how long are you going to be covered for? So as a younger person, you can have a choice to say, I'll only want to be covered up to age 55, 60, 65, and that often brings the premium down. But from what I've seen recently, most insurance companies have moved to a different system where they cover you for what we call whole of life. In other words, if you're disabled at 60 or 30, you're going to get paid until you pass away. There is a tapering towards the end. Often they'll look at your income at that time and they'll reconsider it. But that's basically how long you're going to be paid for. So often today it is for the rest of your life. Please check your documentation, because often there are certain companies where there isn't an intermediary, where you don't necessarily understand what you're being sold. And it has been explained to you, but you're not always 100% with the picture because the process has been long and it's audible only, you aren't really looking at anything. So please check that. The last thing is the criteria. Who can get this benefit? And you might think, what do you mean who can get this benefit? Anybody can get the benefit. You either get the you're either working or you're not working, you're either disabled or you're not disabled. It's not that simple. What the insurance companies are looking at is what is the risk of insuring this person. Let's take a simple example, something that we take for granted on a daily basis, but often doesn't go through our mindset. Take a hairdresser. A hairdresser is dependent, or a barber for that matter, on 10 fingers working well, wrists working well, being able to stand, being able to move. Coming off your mountain bike and spraining your wrist puts you out of work properly. It's not like you can move the mouse awkwardly. You're going to mess up the haircut if you don't have the dexterity that you do. And that's often one of the points of big arguments. Hairdressers, I don't really cut, I manage the salon, I only cut certain clients. Doesn't make a difference. If you need to handle those scissors and you put in a claim, the chances of you claiming are very, very high. Whereas someone like me, who sits behind the desk the majority of the day, and even before Corona, I maybe spent half my day in the car, and that was going to see clients or going to head office or to a seminar. I wasn't driving long distance every day. I wasn't a driver or a truck driver or a delivery man. Those are the different risks that are taken into consideration. Take a guy who says to you that he's a a shop fitter. In other words, every single day he's cutting wood, he's applying it, he's building, he's knocking, he's hacking, whatever else he does. He needs to be able to operate fully in order for him to do his job. And that's where the different risks come in. So certain professions were, up until very, very recently, and some still might be totally excluded, and others you just might pay a higher premium for. So if you're doing a quote and you say that you are in financial services, the first question they're going to ask you is how much you travel. If you work for a big bank and you go to an office and you sit there, your travel is either less than 50% or zero. In my scenario, I could say around about 50%, or it's more. And all those things will affect the premium that I pay. Why? Because the risk is higher. And it's just logical. It's just the way it works. Yes, some might cry foul. Some might say it's not fair. That's just the way it works, because it's all got to do with the way your daily job works and the risk associated with it. So income replacement or income continuation, by me, in my personal opinion, is one of the most important benefits that someone can have. The questions just come through, and it's a question that we need to answer almost on a daily basis, is what about if I've got income replacement at work? How does that work? So if you've got a pension or provident fund at work, first of all, you'll find that it's probably split into two categories. Category A is risk, life, disability, funeral cover, maybe a severe illness. And category 2 is savings. If you just know you've got a pension fund and you're contributing X, it's not good enough. It's irresponsible. And quite frankly, in 2026, you're a little bit idiotic. So to say it so bluntly, you need to take responsibility for what you're paying for and where your money is going, and understand what it is. Often, big corporates, employees feel they just signed when they joined on. They were told what the default was, what everybody gets, and they've never looked at it again. Email your HR, ask for copies, call your financial advisor and ask them to demystify this for you. And you'll find that it's not confusing at all. And you've got life cover, which is something often a factor of your income, 1, 2, 3, up to maybe 7 or 8 times your income, depending on your level. And just because Joey next to you has that doesn't mean that you have it. You might be on a different scale. And number 2 is the disability. Disability can mimic the income, which means it's a factor of your income, or it can be what we call PHI, permanent health insurance, which means that it pays out a percentage of your income. And that is very similar to income replacement. It has different criteria in a way, because it's a uniform across the board, the waiting period, etc., but understand what it is. 1 or 2 things to look out for is that sometimes it'll say it is 80% of your pensionable income. That is an alarm bell that you should be aware of. It's not a trick. It's not there because the company is screwing you. It's there because you should just be aware of what that means. So 80% is self-understood. Pensionable income is maybe a little bit confusing, because if you earn gross 70,000, then the life company doesn't need to give you a pension percentage based on that 70. It could be less. So you need to understand what your pensionable income is and what 80% of that is. And once you know that, then you can go to your financial consultant advisor and say, listen, at work, I'm covered for 70% of my net income. I want to be covered for 100%. Please gap that 30% shortfall for me. And then you've got the peace of mind and the understanding of exactly what you've got. You can now plan, you can now put things in place, and you've now got a symmetry between what you're paying for at work and what you're doing privately. And there are some very sad cases where you've paid for a full income continuation privately, you've got it at work, and now you're up at arms that no one brought this to your attention. And when you look back, the financial needs analysis was done. The questions were asked. You changed jobs, never made anybody aware. Your email address is at Gmail. You received the emails. You never made anybody aware. Even in the annual review, you never said anything. Question might not have been asked, but it's a two-way street. It's your money. Take control of it and make sure that it's being spent correctly. So the question is now, okay, so now if God forbid I get hit by that meteorite and I've got a 1 month waiting period and I'm self-employed and I can never work again, I'm cool because I'm going to get my income for the rest of my life and I can just sit back and watch Netflix. Well, yes, but what's about the debt that you have in your life? Well, the silly answer could be, well, I'll just service it from my current income. Why would you do that? Be aware of what your debt is. What's your bond? What's your outstanding on your credit cards? What short-term loans have you got to pay for, I don't know, your child's education overseas or university in UCT, whatever it was? Add those together. Then you get income. Then you get a lump sum disability. So you have a lump sum disability to cover all your debt. So if God forbid something happens to you where you are no longer able to earn and you're totally and permanently disabled, your debt is taken care of. But then there's another thing to bear in mind. What's about lifestyle changes? What are those? Well, if you're permanently disabled, you're not going to be climbing stairs, are you? You're not going to be getting in and out of the shower that you have at the moment. The car you're driving, unlikely that it's going to serve its purpose. You need to get modifications on almost every facet of your life, and that costs money. Disability is not an expensive benefit. Get another $1 million to make sure that you've got all those covered. Yes, at this point, I can see you looking at me, rolling your eyes and saying, you're a doomsday advocate. You're talking about all these negative things happening. Just look at the bigger picture. You're spending so much on protecting yourself from an income point of view. Just make sure that you've got the lump sum disability taken care of also. And therefore, the income protection will be correct. I left out one important point on the income protection. We're going to discuss it right after a break. We'll chat to you shortly.
This is RV on Business.
Welcome back to 101.9 High FM. This is the RV on Money Show. It is 20 minutes to the hour of 11. We are talking about income disability versus lump sum disability. And I said that I left out one very important point on income disability. And then what happens when you don't look at your notes and you try to remember everything off by heart. The important factor, which could be one of the most important factors, is to make sure that you have an annual escalation on your income. That is one of the biggest challenges that I've seen over time, is that people don't have an income escalation, either by inflation or by more than inflation. The reason they don't have one is it's a lot cheaper to take the benefit without one. You would be silly to do that. Rather afford less, but pay for the income continuation. So if you should be insuring 50, but you can't afford the premium, rather insure 45 and afford the premium with the annual escalation. Inflation, especially in South Africa, is one of the biggest corrosive inputs of people's income. Just think about what you earned when you started working. Just think about what your medical aid costs. In the last 2 years, the jump in medical aid is prohibitive. And that's why the income increase is important. And I would always say it's got to be above inflation, because the basket of inflationary goods, if you look at them, some of those items don't apply to you, and they don't necessarily include medical inflation. So please take that into consideration. Right, lump sum, pay off your debt. change your lifestyle, do what you need to do in order to have the luxury to continue living and to pay for all those additional benefits that come your way. By having the two together, you really have a solution that should be able to cover you in any situation. The difference again is that because we are covering salary on an income, it doesn't always pay for the whole of life. And that's not a negative thing. That's a very positive thing. So if you're unable or you're unable to work or able to claim for a shorter period, that allows you to be able to get that income in, to get better, to get the therapies you need, and off you go. And someone's just sent a message, and it was something that I was hoping somebody would, because I hear this all the time. I don't need this stuff because I have medical aid. And there's about plenty exclamation marks. More than that, this person goes on to say, this is just another way that we are being fleeced by the insurance companies by selling us product that we don't need. If you have medical aid, your medical expenses are covered, full stop. Okay, you've put your name, but I'm not going to read your name out. But I hear your frustration, but let's just break that down a little bit. Medical aid is going to cover your expenses as and when they occur within limits. It is very unlikely that a medical aid, no matter what you pay, and I'm sure that's why you're frustrated because of the cost, and no matter what level, your medical aid will only pay a limited amount of even in-hospital benefits. And it will pay the expenses. So yes, medical aid in South Africa is absolutely fantastic. And I talk from experience. It is just absolutely brilliant when you really, really need it. You pay for it, but you get what you pay for. And if you look at it from around the world, our private healthcare, our private medical aids are just fantastic. Expensive, but fantastic. But they're paying the medical expenses. So if you are a self-employed person and you have a 1 month waiting period and you're in hospital in ICU for a month, the ICU is covered, but the income. You are then in step down for another 2 months. That's covered by your medical aid, but where's your income covered? More than that, where's your business's overheads covered? You still have to pay rent. You still have to pay, in the old days, you had to pay your phone. And today, you still have to pay a lot of that. You have to pay your staff. It's not their fault that you fell off your bike. Those overheads are still there. Medical aid not paying that. Medical aid's paying the expenses as they arise from your injury. And that's why the two work together. Furthermore, what happens if you're not going back to work? You need to pay your medical aid premium in order for the medical aid to pay your expenses. How are you going to pay that? If you're one of those lucky people that have assets that can generate income, great. But most people can't. They need that income to come in order to generate the income to pay for the medical aid. So medical aid is an independent pillar that holds up your life. It is there to only pay the medical expenses as and when they occur. Its premium needs to be paid, and you need to continue to earn an income. So that's why your medical aid is crucial, your income cover is crucial, and your lump sum is crucial because it allows you to adjust your lifestyle. Next question that's come through is, can I not get enough lump sum disability in order to cover my income? The answer to that is yes, you could. The truth is, if you do the maths and you work out how much lump sum you need to invest in order to draw an income to cover you with inflation going forward for X amount of years, the numbers are often staggering. It might be cheaper than getting income replacement, but there are restrictions as to how much disability you can have. and the heartbreak when it doesn't pay out on temporary because you only booked off for 6 months, and you will get better. Again, an example, FMI in the old days, and I haven't looked at their list in the last year, would cover artists. Artists who had an injury, they would cover. Your mainstream insurance companies didn't cover. I had a client who was an artist. She went for a jog, tripped, dislocated her shoulder. Now she wants to claim on lump sum disability. The insurance company says, look, it's temporary. You will get full mobility back. You'll be pain-free. And yet the client's in tears on the other line saying, but I can't draw. I can't paint. I can't earn an income. Don't they understand that? And the answer is, of course they understand that. But it's not a permanent disability. It's temporary. Today, that client then went to FMI, which is the Bidvest Life today, and got cover, and was one of the biggest reliefs that I had, because there would been claims thereafter, and we, as a main insurer, would never have covered that. Those are the issues to bear in mind, as to how does each one work, who can, who can't get cover, and when you get cover, to make sure that it's suitable to you. Let's take a quick break. We'll be back with you in a moment.
This is RV on Business.
Welcome back to 101.9 High FM. It is 10 minutes to the hour of 11, which means that we have a few minutes left together. And maybe let's just use that time to recap. Today, we really discussed the importance of having an income protection policy to make sure that your income is protected. We need to be aware of the amount that we cover. We need to be aware of the annual increase. We need to be aware of the waiting period. And most importantly, you need to be aware of what your job is, disclose it fairly and honestly, so that you're paying for cover that in the event of something happening will pay out. It doesn't always only pay on permanent disability. It can pay on temporary disability, so you can claim for it for a couple of months, for a period of time until you get better, and then you can stop claiming. Whether you can work or can't work during that time, in other words, if you can or can't receive a salary that is company dependent, please just check with your financial advisor what the rules are and how that works. Someone's just messaged me now. I was extremely frustrated when my insurance company told me that I could not claim because I was pregnant, even though I had difficulty getting around and the pregnancy was incredibly uncomfortable. First of all, congratulations. Second of all, I feel for you, because this is something that people who are financial consultants, financial planners deal with all the time. And the cliched answer is that pregnancy is not an illness. And I know that's said misgivingly and almost condescendingly, but pregnancy is part of life. And it doesn't pay out because of that. A lot of insurance companies have benefits that happen because of pregnancy. Once you have the baby, you can get help in other areas. You just need to make sure that your benefit is updated and has it. But where you will get a payout on pregnancy is if your pregnancy leads to another issue. So, for example, if you are unable to work because let's say you're a physio and your standing is not healthy for you or the baby, and the doctor doesn't want you to stand, that's a problem. So we got to look at it and issues like this. So if you can motivate it by a medical professional saying that due to the pregnancy, you might have this and this complication or this and this limitation, submit it and have a look. But in this day and age, once again, one should be aware what's going on, and one be understand that from maybe your third trimester, you're not going to be able to get around. Playing, squash and doing normal activities is going to be curtailed. Bear that in mind. So just to be aware of that. If God forbid there are complications, you should definitely be in touch and see how that the insurance company can help you with that. And again, if you are planning on starting a family or having another child, please check with your financial consultant that your benefits has all the benefits that could possibly be covered by becoming pregnant. Not a full payout, but there are allied benefits that come to it. There are many, many more questions coming through. I think I've covered a lot of them from what I can see briefly in the previous segments in the show. Please look at the podcast where it comes out. Everything should be there and allow you to get an answer. If not, message me and I'll be more than happy to answer with you. My closing statement is, please make sure that you give a full disclosure of anything that has happened to you in the past. Rather overstate than don't state. If you broke your arm playing cricket in grade 10, put it down. There's no harm in that, rather than not stating something that you think is not important. And number two, if your job changes, even if you feel it's not worth mentioning, please send an email and mention it. And you want your new job to be described in your policy document so that it's there and there's no questions coming up later. Thank you, everybody, for listening. Craig, as always, thank you for pushing the buttons. Look forward to chatting to you next week. Have a great week. Be well.